Hi, welcome to Equisys Financial Services. We appreciate your interest in learning stock trading and analysis. For next few minutes in this video, we're going to discuss about the basic aspects of stock trading, like how to buy, sell shares, some key terms like long, short, unwinding, some key terms about it, and what is the role of brokers and how do we trade in markets. We generally recommend people to trade with knowledge and discipline because we believe knowledge and discipline is the source of profit. Stock market order management system. Order management is nothing but whatever your wish. Like I wanted to buy Infosys share, I want to buy TCS shares, I wanted to buy Tata Steel, I wanted to buy Tata Motors. What exactly we are buying? We are buying shares. Shares is nothing but ownership of the company. I want to buy the shares at this particular price at this many quantities. Then this is nothing but order, but you wanted to buy, so it become a buy order. And the same way some other person can place a sell order because he wanted to sell Tata Steel at this much price and this many quantities. So the buy orders and sell orders are generally placed by the people who wanted to buy and sell. And who decide the stock price? The stock price is actually decided by the buyers and sellers because a lot of buyers and sellers are competing in one particular queue, and that's nothing but a stock window. In window you can find a buyer side and seller side. A lot of buyers would compete to stand in number one. Say I wanted to buy Infosys at the rate of 1000, whereas the other person is ready to pay 1001. Probably he deserves the better chance to buy a stock than me because he is quoting better than my price. And if you quote 100,002, then you stand number 1 and 1001 will be standing number 2 and I am standing number 3 because I quoted only 1000. It means the buyers will ask to stand in a descending order based on the price they quoted. It means even I wanted to buy Infosys at the rate of 100, still I can place buy order at the rate of 100, but it may not be executed because a lot of other buyers who are standing better than me and they are standing ahead of me. Likewise, we have a lot of sellers in the market. As far as the sellers is concerned, the best seller is none other than the one who is expecting the least amount, and he is called as the best seller. So the order management, a lot of orders by the people is being taken to the exchange by the brokers. It means you cannot buy, sell shares directly getting into a stock market. It means you have to be connected to stock market only through a broker. Why broker? We will see things in detail inside. Before getting into the trading, first we see how the trading deal and trading settlement is different. Trading deal is nothing but I wanted to buy stock at this rate and some other person wanted to sell the stock, and our both the prices are actually meeting and we both are agreeing the transactions and the transaction is getting executed is nothing but a trade. I am placing my buy order, other person is selling an order and the trade is got executed. Settlement is nothing but when we are fulfilling our commitment. The promise what we make, buying and selling, the price and quantity is a deal. When I execute my deal, when I execute my promise, that is where it become a settlement. Okay. Now we see online trading system. Online trading system, why we are speaking about this topic? Because these days the trades are happen through online. Am I right? So when you wanted to buy shares, you will be first you have to open trading account and demat account to a broker, through a broker, and broker in turn will give you a membership where you can actually place order. So through the client ID you have to log in and you will be watching the market windows, and with respect to the prevailing market price, if you place your bids and ask nothing but the seller's orders and bid is nothing but the buyer's order, and based on the price it goes to the broker, and the broker in turn takes your order to the exchange, and exchange will throw all the orders in one particular queue, and based on price a lot of people are actually competing. So that's the reason why the prices are fluctuated very often, because it is a perfect competition, because across the world if anybody wanted to buy and sell Infosys, you are left with only two major queue. One is Bombay Stock Exchange, the other one is National Stock Exchange. So a lot of people gonna compete in one queue, and it's get fluctuated very often. Okay, and whatever the deals happening between 9 o'clock to 3:30 will be start getting executed later after the market closes. That comes under the trade settlement. Okay, before getting into basic terms, we actually see some aspects of what is the role of broker. And I hope you people must recollect the broker is the one who is generally responsible for the clients. But sometime if it is not honored by the exchange, then the exchange is the one who is responsible for any trade. Buying and selling happen through an exchange, and if it is not settled properly, and it is the responsibility of exchange to do the proper settlement, it is not the responsibility of broker or the client of the counter person. Now we think about some basic terms. Order is nothing but I wanted to buy 100 shares, and I'm giving this instruction to my broker. I'm asking him to place into the exchange, and this communication is nothing but an order. When it comes to online technology, I'm opening my software, I'm choosing the particular company, I'm pressing F1 for buy order or F2 for a sell order. It is for the convenience perspective the short term keys, and the window is opening. There I'm mentioning the company name, and I'm mentioning the quantities and price. I'm placing it in the exchange. It means an order. Trade, when my order meets the counterparty price, when I wanted to buy the shares at the rate of 250 and the seller is also ready at the rate of 250, then the shares getting executed. And what is long? Buy, sell is what market knows. Long position is nothing but when you expect the price to go up. How do we make money out of this expectation? When I see the share price going up, I buy the stock now, I hold it for a time, then I sell it later. The same way, when I see the price to go down, I sell the stock now, I hold it for a time. As the price goes down, I buy it back. So when you expect the price to go up, I am buying a stock for the first time, it is nothing but a long position. If the price goes up, I sell it off. If price goes down, how do I make money out of it? Can I sell a stock which I don't own? Yes, it is possible, because if I make a sell order now, and if it is getting executed in the exchange, it become a trade, but I don't need to give the shares right now. I have to give the shares only by end of the day. It means I have a time to go to buy back the shares. Without having a shares, if I sell a stock, then this will be considered a short position. Then it is my responsibilities to cover the position before 3:30, because after 3:30 exchange, when they check my accounts, I should keep some stock in my account. Otherwise they'll go to the auction market. What is intraday market? Intraday is nothing but anything you do within a day. I am buying and selling it within a day. It means intraday position. I am selling a stock and buying it back before market closes. Then again it become a intraday trading. What is delivery? I'm buying a stock now, selling it after a few days later, then it become a delivery trading. Demat account, dematerialized format. Long back we had certificates. When you buy shares, you will be getting a certificate, it will be stored in your account, and you will take this custody, and this is a certificate format. Now it is in dematerialized format. So your shares are actually converted into an electronic format and it's getting stored in NSDL or CDSL. Online trading, 20-30 years back, broker takes your order, goes to an exchange, shout against the people, and he get this deal done and gives it to you. About 5-10 years back, a lot of transactions are happening through online, but still we have a call and trade practices. It means people as a retail people, we give a call to the broker asking him to buy and sell. Then in turn he places order through online. Because with the latest technology now we can actually buy and sell things by sitting at your home. I mean through your laptop or through your cell phone, still you can buy and sell, because things are connected to everybody, and all you need is trading and demat account through a broker. Okay, this is as far as the basics of stock trading is concerned. And now it's time to think about money making ability, because knowing market basics and trading gives you some basic aspects of it. So we have a series of video will actually make you to learn more about markets and can make you to become a confident player. Before getting into any analysis, it is must to learn the basic aspects of business and gambling. This is where you get to know how to make money in stocks. Okay, we hope this video would be useful to you, and if you find this video is very useful, then we request you people to share this in your social network, probably in Facebook or uh, Google Plus or Twitter. It might probably help us to reach more number of people, more number of interested people. And if you wanted to start practicing markets, you can actually join us. And if you have any comments, any feedback about the video, probably it is uploaded in YouTube, so probably you can post your comments below the section, and we can appreciate, we will always appreciate your feedbacks, and we take it serious. Thank you. Happy trading.